Welcome, folks. This is the first episode of the series Road to 100K. In this series, we are going to be seeing if we can take $1,000 and grow that into $100,000, all through the use of just doing consistent weekly credit spreads. Now, I'm by no means a full-time trader. I have a full-time job. This is just something I'm trying to do on the side, make a little bit of extra money. My trading knowledge is limited. I've only been doing this for the last couple of years, so some of these techniques I do might not be the best. I'm just putting that disclaimer out there. If you do actually learn something from this series, that's great. That's fantastic. But that's not going to be the main point of this series. This is just a way for me to document how well I do, starting from $1,000 and seeing how far I get down the line. And I may very well may go bust. I may lose it all. So just bear that in mind. All right. With that said, let's just jump right into what I do and what I'm trying to trade. SPX is going to be the main index I'm going to be trading for this series, mainly because of its 60/40 tax treatment, and I really like the spreads on this. I don't have to spend as much money on the number of contracts to get the same amount of profit to reward, or sorry, profit to risk, and your risk is the collateral in this case, as I do it for SPY. So that's why I trade SPX. Now, what I'm trying to do is I'm trying to see if I can aim for about 10% profit to collateral ratio. 10% is great for me. Anything less than that, I might do, but 10% is probably going to be the max I try to do. It just gets a little bit to me a little bit more risky as if I try to go above that, and I'm trying to make consistent gains at a very low risk. With that being said, the trading platform I'm using is thinkorswim. I've been using this for the past year or so. I really like it, so I'll probably be using this for a good while. Now in the top left corner of the screen, you'll see that this is the balances amount that I have on this account. My current cash is about $1,100. This was after the couple of credit spread trades that I did this week. And so that's the amount we're going to be starting out from here on out. You'll also notice that I actually have an account value about, 2.7 grand. That's because I have some other positions in this account, but we're going to ignore it for the series. I'll always be sure to give you guys the adjusted numbers based on the profits or losses I make on the credit spreads. All right, now that we got all the introduction stuff out of the way, let's actually jump into what happened this week. This week, I actually had to record a loss, and there will be some losses here and there. I know I said we're going to try to make consistent gains, but there will be some losses in there. I'll go through exactly why it happened. So this week, I did a total of 3 trades, and normally I try to do very short expiration dates, 1 day, 3 days, sometimes 2 days. The very first one I did was a 1 day expiration, a 33.75 put credit spread, and that one I actually came out with a $40 gain. So Monday to Tuesday, that first trade was a winner. The next trade, I placed it on Tuesday. It was a call credit spread this time. The reason why I kind of did that, the RSI was looking a little high on some of the 20-day, 30-day charts. But here's the thing about doing call credit spreads during a time when the market is going all-time high. It's very hard to gauge how much you need to place that strike price at because there's no resistance. At least for a put credit spread, I can actually use a support level. I typically use a support level for put credit spreads and put it a few ticks underneath that. I thought there was going to be a pullback sometime on Wednesday or Thursday, even Friday maybe. Didn't happen. So that one was a 34.90 call credit spread, $170 loss. I actually had to close it out early because I did not think that the market was gonna pull back. And as you saw on Friday, it did not. It actually came to all-time highs. So that's another thing that we have to look into and be careful of. Be smart about getting out so you can minimize your losses. My total collateral there was about $480. So if I wanted to, I could have held it to expiration and had instead a $470 loss, which is not what I wanted. I decided to, on the next trade on Thursday, see if I can make a little bit back. I placed a 1-day expiration, 2 contracts this time, a 34.40 put credit spread. That one actually came out pretty well, got about $60 gain. So I managed to make a little bit of that money back. And that's why the total, it was about a $70 loss. So I think for the near time, I'm going to be doing put credit spread so I can actually place the strike prices below a support. With the market this time and the current events, market just keeps tracking up there. Tech is doing very, very well. So I think put credit spreads is going to be the way to go for the next couple of weeks. That was week 1. It was an L. But week 2 is right around the corner. And we're hoping to make that a profitable week. So if you like this video, make sure to leave a like, a comment, and subscribe to the channel. This is going to be one hell of a grind. But if we can hit our first couple of 5K, 10K, maybe 15K milestones in the next maybe few months, man, we're going to snowball. So thanks for watching, folks, and stay tuned for next week.